The waiting is over and Finance Minister Pravin Gordhan has delivered the 2012 budget. To get some budget brings relief while others have added pressure. But for in-depth analysis of the budget now, I'm joined at the desk by Mohammed Nalla from Nedbank Capital, Annabel Bishop from Investec, Mandy from PwC and George Roper from Agility Global Health Solutions. Thank you all for joining me. Let's start on the health side of things, George. Pretty much a non-event from your perspective. In fact, just in the mini survey that I did with my panelists, you say we're still in the dark when it comes to NHI.
That's exactly right, Bronwyn. There was a lot of expectation around, especially in the media, in the newspapers, what's going to happen, how is NHI going to be funded, and there's been a lot of talk around that, and we still don't know how it's going to be funded.
The most we get is a discussion paper come April.
That's right, to be issued in April 2012. And I think what people need to remember is national health insurance is a very good idea that government has embarked on, but it's a very big challenge on how it's going to be funded. And this national health insurance model is both a healthcare financing model and also a healthcare delivery model. And people sometimes forget that. And this healthcare delivery model side of it is going to require huge amounts of capital spending. And we still don't know how that's going to be funded. Well,
David Shapiro, in the pre-budget discussion, of course, David from SASFIN saying, rather take the money and increase the efficiency of our hospitals before introducing NHI. Would you agree with that?
That is an option. If that's the solution, I'm not quite sure that that's going to be the solution for the broader population. But there
still
is
no clarity on how we're going to fund this.
Correct.
Increases in VAT being tabled, exactly what we had last time round.
Correct.
Mohammed, let's move to you, and some surprises on your front, specifically with the dividend withholding tax now coming in at 15%. People were expecting 10% on that front.
Yeah, I mean, absolutely, Bronwyn. Expectations there certainly for around 10%, 15%, a bit of a surprise there. The other surprising thing, again, from a tax perspective, would have been the CGT change, where that was increased. But broadly in line in terms of our expectations when you start looking at things like the deficit, when you start looking at the growth projections. So a fairly decent budget there.
Yes, you said pretty much in line with expectations. And I think you were one of the only houses with 4.6% on the budget deficit as a percentage of GDP.
Pretty close to that, yeah.
Carl, your thoughts, surprises on the tax front? You saying mixed bag on the revenue line?
Yes, it really was a mixed bag. I mean, if you're a low or middle income earner, I think generally speaking you'd be happy. High income earners,
that 9.5 billion rand in tax relief going to your lower bracket.
It's going to go mostly to them. High income earners maybe not feeling quite so happy. Mohammed has touched on some of the issues that will impact on high income earners. You can add to that the cap on retirement funding contributions that is to remain, although it will be slightly increased from what was proposed last year. But yeah, generally speaking, high income earners might not be too happy.
Increases in those capital gains taxes, your thoughts on that front?
Yeah, it is a little bit concerning that there's now perhaps the start of a trend to increase those and bring them closer to the tax rates on revenue. If you went back and looked at when CGT was introduced, the reason for the lower inclusion rates was largely to compensate for the fact that there'd be no inflationary basis adjustments as there are in some other jurisdictions around the world. So a little bit concerning that we're moving towards taxing capital at full rates.
Obviously, we'll be coming back to tax implications of the budget. Annabel, from your perspective, a good health budget when it comes to financial discipline means that the ratings agencies aren't going to downgrade us as a country.
I think, that this is quite important that we've actually seen a reduction in the fiscal deficit projections. We were previously told by government it was looking at a deficit of 5.2% for 2012-13. This has been revised down to 4.6%, so that's quite a substantial revision. This year we're likely to see 4.8% from 5.5%. So again, that fiscal slippage that we saw the whole of last year has actually been removed. And also what's quite key as well is that our net debt, the escalation in net debt actually slows as well. So instead of reaching 39.7% by 2015-16, it's now 38.5%. These are, really good news stories from a ratings front, because the rating agencies are very concerned if we increase the pace of our debt issuance, and it actually looks like, or if we increase the pace of our borrowing, it actually looks like the pace of borrowing is going to slow marginally.
To what extent do you think this budget has been prepared for the ratings agencies?
I'm not too sure if it's been prepared for the rating agencies, but I think what it has been prepared for is that there's there seems to have been a recognition flowing through the budget from a slight reduction in expenditure to a slight as I said, a reduction in the fiscal deficits and obviously the expansion in the debt levels, that is all these factors of the rating agencies signal as being red flags. Those have actually seemed to have actually come under the spotlight and actually dampened down a bit. So it almost as if the 2011 year was a big widening in terms of fiscal slippage, and this has actually been pulled back very sharply now.
Mohammed, when it comes to infrastructure spend, 3.2 trillion being tabled in terms of mega projects. Annabel and I were chatting while the budget was being delivered. We don't see where the detail is in this 3.2 trillion. It's a huge number.
Absolutely. I mean, that's a very, very big number. Again, similar kind of theme that we picked up in the State of the Nation address. So a very strong infrastructure and a capacity building theme, which is very strong and very positive for investors. That being said, when you throw a number like that around, one has to also be cognizant of the fact of what is the time period that we're actually spreading the spend out over. And also in terms of that, I mean, he didn't go into too much of detail in terms of where they're going to be finding the funding. He didn't infer too much in terms of...
But this is what everyone was waiting for. We want to know where that funding is going to come from.
Absolutely. I mean, the expectation in the market was almost pretty bearish going into the budget, with the guy saying, you know, if there's going to be all of the spend, where they're going to find it? Are they going to be punished in the bond market? Is that going to be negative for the rand? And in all likelihood, you know, it doesn't appear as though he's given us much detail on that front, but he's also inferred that a lot of the parastatals are actually going to have to go it on their own and finance a lot of this out of their operation, out of their cash flows. And that potentially would make it more difficult for them to raise the funding if the government's not necessarily going to step behind. But from an overall macro perspective, probably still quite positive.
Staying with the infrastructure spending, you were surprised at that number.
I think it's a very big number to throw out without giving you a specific time frame, but I think what is quite important is it's close to 900 billion spent over a 3-year period, and that's, you know, much easily digestible. You've got your billions for the electricity sector that were announced in the State of the Nation address, and also for transit as well. I think some of the worries are if we see this money being raised by the public corporations themselves, either they're going to have to tap into the debt markets, and that's really going to have significant overcrowding in South Africa's debt markets. Already government is seeing its issuance, despite the slight pullback, it still rises to close to 40% in your 2015-16 period. So if you add in the parastatal issuance as well, there's significant crowding out. Sure, you know, you are going to get some absorption potentially from the Basel III regulatory requirements, which actually require the banks to hold higher level 1 assets, but that's probably not going to be enough to actually absorb this increase. So we probably are going to see yields drifting up. So that means a rise in longer term interest rates in South Africa.
Take us through the reforms to medical scheme contributions and your thoughts on that front.
Yes, I think that's a very small step towards a national health insurance model. What the Minister has done is he's introduced a credit for contributions for medical schemes, but that's now a fixed rate of 230 Rand a month for the first 2 beneficiaries in a family, whereas previously your relief was based on your taxable income. The Minister said that these reforms will significantly improve the fairness of the personal income tax system, because previously your higher earners had more benefit from medical scheme contributions than what is currently announced to be implemented on the 1st of March.
So just in terms of you saying that it is a tiny step towards NHA, a very, very small
step. A very,
step.
very small step, yes.
Carl, we didn't hear anything on this super tax on mines, nothing. In fact, no commentary on mining whatsoever in South Africa.
Yeah, that was somewhat surprising in some senses, bearing in mind that the ANC's paper, research paper is now public knowledge and so on, and was published last Friday. So we did expect to see some sort of announcement, perhaps along the lines that they would look into the possible reform of mining taxes and so on, but yeah, absolute silence.
What is the biggest surprise for you from a tax perspective in this budget? Is there a significant surprise?
Probably the carbon tax, I'd say. Notwithstanding that there's a second consultation paper outstanding, the Treasury seem to have put it on the table now that they're going ahead with the carbon tax.
When are we going to see it implemented?
Well, they say 2013, 2014. So we'll have to wait and see it. As I say, there's still consultation to take place. But it looks like they're determined to go ahead.
Well, it looked, dividend withholding tax, we've been waiting for many years and many budgets for this to come to fruition, so we could see a similar situation with the carbon tax. Again, Annabel, what stands out from your perspective?
Well, I think, we have already talked about the reduction in fiscal slippage. To me, that really does stand out. I'd be quite interested, we don't have the details yet, to see what the infrastructure spend itself is, for public sector infrastructure expenditure, we were going from 7.8% in the 2011, 12, 13 period to 6.8% by 2014, 15. That's a full 1% reduction, and that certainly doesn't tie in with the State of the Nation address, where they are indicating a huge increase in infrastructure expansion. So that's going to be something I'm looking for in the detail, along with compensation of employees as well, because we are obviously getting a significant increase in the number of civil servants, and I think the Minister quite rightly identified it now needs to be focused on those with service delivery as opposed to administration areas.